Khalaf. Welcome to our What the CEO Needs You to Know earnings call app. My name is Brent. I'm looking forward to spending some time to you as we get going today. Excited to be a part of this program. These happen every month. Every month we have a chance to look at a different industry. The real goal is to help employees understand how to assess your company, be able to look at your the financial performance of a quarterly earnings call, be able to grab that information, take that. It's also a chance to be able to look at it from maybe if I'm in a sales role, how do I look at my customers and really understand what their strategies are, what their key metrics are, and how a partnership with our company can really drive towards that. And for some of you, it may just be, hey, I have an interest in learning more and more about business. Our goal is to continue to build the business acumen of everybody. Now, some of you have participated in our program, some have not, no worries. We're grateful to have whoever can join us on these. And please feel free to invite others as you continue to engage. As we look at this course, our program today, I've got a quick couple logistical things. The first thing is making sure we're comfortable using that chat box. So let's get that open. Here's what I want you to do. In the chat box, I want you to go ahead and put in, where are you calling in from? Could be a city, could be a state, a province, could be a country, could be a location in your home, as many of us are working from home today. Ginger and I are working from Salt Lake City, Utah. So go ahead and put in the chat box, where are you calling in from today? In the basement, there you go, Salt Lake City, Utah is where we're at. Our claim to fame in Salt Lake here is we had the great chance to host the world in the 2002 Winter Olympics, a great opportunity. Excited to have you. Now, some of you have been through our program. One of the things we recommend, if you're new to us and you're from our one of our Building Business Acumen programs, is to engage in these for the next 2 or 3. What you'll find is you do this multiple times. You get very comfortable in how to assess either your company, your customer, or whatever company you want to look into, their financial performance on a quarterly basis. And boy, I can't think of a better time to be thinking about this, as we've just finished Q3. And now we're getting into year end of a very dynamic last 2 years as we deal with the pandemic and how it's impacting business, supply chain, inflationary pressures, etc. Well, as we get going, let me go ahead and share my screen. I want to share our slide deck as we get going. I want to start with a quick polling question. As we get going, you're coming to a program called What the CEO Needs You to Know Earnings Call Lab. And my question is this: when is the last time you've had a chance to listen to an earnings call? So let me go ahead and open that poll up. You should see a poll on your screen. Once you've opened that up, go ahead and tell us your answers. When's the last time? Boy, I listened to an earnings call this year. You know what, Brent? It was last year that I did that. You know what? It's been a while since I've done that. And for some of us, I maybe I've never had a chance to actually listen to these earnings calls. Now, if you're with a privately held company, obviously you may not have access to all the financial data that you get from a publicly traded company. That being said, the tools that I'm going to give you can help you think about what's the strategic focus of our business and begin to identify what are the metrics your executive team are talking about. How should you think about them? And most importantly, what can you do to impact them? That's kind of the goal of this program. Now, of course, if you're a publicly traded company, there's a tremendous amount of information and data, and it's kind of using the tool to kind of filter through all that information, which can be a little daunting at times. But that's our hope today is, after 19 years in business, helping employees understand how to look at their companies, understand the strategic focus as well as the financial metrics and measures, and then helping employees understand what can I do to impact it. That's the tool that we've created, is a tool to help you walk through that process and feel more comfortable as well as confident around it. As you look at the answers, here's our kind of responses. Boy, most of you have had a chance to listen to a call this year. Some, it's been a little bit longer than that. And just a small percentage have never had a chance. And nobody said, I'd rather go to the dentist. Excellent. I got a bunch of finance geeks excited about jumping into financial information. Well, as you look at this course on our lab today, as we jump into that, let me kind of give you some statistics that are kind of interesting. These earnings calls happen on a quarterly basis for publicly traded companies. They're actually not required by law to provide the earnings call. That being said, if they're publicly traded, they are required to submit financial information. So most companies take this opportunity to share that information with their investors, with the analyst communities, as well as employees. Maybe just listening to the call, but many companies will do like a town hall meeting. They'll do various ways in which they try and get their employees on board. Now, even with that, here's a statistic that's kind of interesting. This comes from Harvard Business Review. It says 95% of employees don't understand their company's strategy. Now, you might say to me, wait a second, Brent, here at my company, we're very clear on our strategy. Every month or so, we get together, we're talking about what our strategy is, how we're performing, where we need to adapt, etc. This is just a general number that kind of gives you a data point. Now, you may be better, you may be worse, depending upon your organization. Look at this stat. Look at this stat. So not only is it challenging from the strategic perspective, but what about this? 90% of employees don't understand their company's important business metrics. For example, EBITDA, free cash flow, return on capital employed. These are metrics and measures we'll hear our executives, earnings per share. These are metrics and measures we'll hear our executives talk about on a quarterly basis. So imagine you're the CEO of a large organization, MetLife, for example, the company we're looking at today. Michel Khalaf, who's the president and CEO of MetLife. You've got over 45,000 employees, so 46,500 employees. You're globally dispersed. You have assets throughout the globe. You're dealing with a global pandemic. Of course, you're life insurance. We always think of MetLife as a life insurance, but there's a large portfolio of products and services beyond life insurance, even stuff I wasn't even aware of. Pet insurance was a new thing for me. Legal insurance, beyond just our standard kind of property casualty, life insurance, retirement plans, etc. But a significant amount of portfolio of products and services. You got significant regulatory oversight, particularly as you're dealing with all the insurance. They actually have a little bit of health insurance, all this retirement requirements, etc. So a lot of regulatory oversight. And you're seeing your customers change. One of the things that they talked about was the next generation of individuals looking for insurance. They're looking beyond just the standard stuff like pet insurance and other stuff for things that they're needing to kind of provide. So they're looking at new markets, new opportunities. So you got all this information, you got a strategy, you got a direction. You speak to the market around performance. The market's expecting you to either hit or beat your key metrics and measures. So what is it that you think Mr. Khalaf is trying to get employees to understand? What do you think he's trying to get his customers to understand? What about others within their kind of shareholders' perspective, their specific shareholders, partners? How do you get them all on the same page? Well, folks, that's what these earnings calls become. It's a resource that allows the senior executives to communicate to the market kind of where we currently are at, where we want to go, and how we're going to get there. There's a chance to kind of speak to the financial strategies as well as focus areas they're trying to emphasize. It's a chance to be able to kind of communicate what's working, what isn't working, and what are we doing about it. These are great opportunities. If you truly want to understand your organization, if you truly want to understand your customer, if you truly want to just understand your investment strategies, listening to earnings calls and being able to capture nuggets of information that lead you to action, something you're going to do with it. That is what this is all about. Now, what we find is senior executives are doing everything they can to squeeze it all out of the financial statement. But you think about it in day-to-day operations, in the chat box, who really impacts the business? As you think about Mr. Khalaf and team, their senior executives, who's really impacting the success of whether they hit their cash flow numbers, whether they hit their profitability, who's really impacting that? Is it the senior suite? Brooklyn's kind of telling us, yeah, it's the employees. Absolutely, it's the employees. What we find is employees are functionally brilliant, working with 30 of the Fortune 50, many of the Fortune 500, great companies globally. We've learned that the employees are functionally brilliant, very good at what you do. You know more about your role than I'll ever understand. That being said, at times we kind of go through our careers very focused on our functional role, what I call blinders on. We're kind of focused on our individual area. Well, these earnings calls are a place for you to step back for a moment. Get the big picture perspective. What are their executives talking about? What are those your customers' executives talking about? And then we go say, okay, so based upon what they're saying, what can I do to impact that? That's what this is really about. And here's kind of my guarantee as we go forward. Having done this for 11 years, worked with many individuals, those individuals who engage around those earnings calls will build their business acumen tremendously, will really build their credibility, their career, and their company through engaging around these. So my guarantee to you is we provided a simple tool that will walk you through a simple process. For those of you who've been through our program, any of our graduates, You'll be familiar with the tools, and they're just packaged in a nice way to walk you through the process. If you're new to this, you've never been a part of our program, at the end, you'll have opportunity to sign up and find other resources we have, but you don't necessarily have to go through our program to be able to use the tool. The tool will walk you through the resources that can help you get some great value out of this. So that's my guarantee. As you take this tool and use it, you will truly build your credibility, your career, and your company. So let me suggest where we're headed. I'm going to give you a simple process. You'll see it right on the screen: prepare, analyze, and act, and apply. Then I'm going to give you a simple framework and a couple tools as part of that process. That's what we want to walk through. So let's start with the prepare phase. So as you look at the prepare phase, what do we want to talk about? Well, first, let me just give you an overview of these earnings calls. If you haven't been on them, about 8% haven't been on. Some of you, it's been a while. These earnings calls happen on a quarterly basis. They're somewhere between about 45 minutes to maybe an hour and a half. Most of them are around that 50 minutes to an hour time frame. Now, in those calls, you'll typically have a portion. The first part of it is the executive team communicating their prepared remarks. This is where they talk about kind of, here's our strategy, here's how we performed around strategy, here's what we're the strength in our performance. If there's kind of gaps in our performance, what are we doing to fill the gaps? Then it'll shift about 20-30 minutes into it, and then the analysts have an opportunity. Now, this isn't you or I typically. There's a few, like Tesla, for example, allows you to submit questions as an individual investor, but most of them, they're doing the large financial investment groups that have a chance to ask questions. So they have a chance to clarify the information that the executives have both provided and what they've distributed as far as press releases, as far as supplemental data, but then also they get a chance to respond to the communication of the prepared remarks. Again, it's about an hour. Now, as you look at this, my recommendation is to go through the whole thing. That's where you get tremendous value. That being said, if you're short on time, boy, if it's my company, I might for sure cover the prepared remarks. They're absolutely valuable. I get to hear what my executives are talking about. The reason I like the questions, the Q&A, I can begin to see how the market's seeing what they're communicating. If the market starts kind of questioning in certain ways, I can tell, well, they're not really buying what the executives are saying. So there's some real value in that process. Again, about an hour to kind of review. Now, most of these, you can listen to them live. The other way you can do it is the minute you can get access to a transcript. A transcript, you can read it, get through it much quicker than maybe listening to the full hour if you're a faster reader, et cetera. But both ways are great opportunities to get access to that. So that's kind of earnings call 101. So 3 things I want you to do in the prepared section. Number 1, you got to locate the transcript. So let me talk about how to kind of locate that transcript. In order to do that, I'm going to shift gears. I'm going to stop sharing because I forgot to put up my other screen here. And I'm going to go ahead and open a Google page, and that's where we're going to go. Pretty simple how to access this information. There's this great website we've all heard of. It's called Google. I'm going to go ahead and just share my screen here. And I'm going to go ahead and jump into, let's just do a search. So you just jump in, and what I'm going to do is I'm going to do the company, MetLife. I'm going to do Q3 because that's the most recent quarter. And then I'm going to go ahead and type in earnings call. You'll notice it starts to kind of guess for me. Go ahead and select that. I got multiple options here. Now, you're going to see both the company's specific information. You notice it says investor.metlife.com. This is their investor relation page. But there's also a third party. You got Motley Fool, you got Yahoo, Seeking Alpha. These are all third party locations where you can access stuff. Now, I typically like to go directly to the source. So I jump right here. I see quarterly results. This is probably going to get me the closest to what I want to look for. I click on it and I open it up and boom, I'm there. Here's the information that MetLife provides through their web page. You've got your press release. If I want to get access, click right there. Press release. Now, press release is something you want to look for. Now, pre-call, you won't be able to access it, but post-call, or maybe just prior to the call, sometimes the night before, once the market's closed, they'll go ahead and send out the press release. But it's going to give you a nice overview of what's going on, but it'll also jump into some basic financial information, which is great if you want to do a quick assessment. Now, they add financial supplements, so they actually give some financial statement data. But many times that's just right part of the press release. You also have supplemental slides, etc. If they have a slide deck, I love the slide deck because it reviews basic concepts of what happened in their business during the quarter. Now, once the call is done, they're required to submit to the Security Exchange Commission. If it's a quarterly, it's called a 10Q or a 10K for an annual. So this is actually their SEC filed data. Now, I have no clue what they did, but this is absolutely the size that they gave us. I got to blow that up multiple times to be able to see that. But that's actually, you can walk in and right here, I'm going to be able to access, here's their balance sheet. Here is their revenue or their income statement, both the quarterly numbers as well as the annual numbers. So if you were looking at what should I look for, Brent, here's what I'd say. Get the press release. Most of the time, the press release is going to have the financials. If you can't find the financials, wait for that 10Q to come out. The other thing I look for is the slide deck. If they have it, sometimes they don't. The last thing is a transcript. You'll notice there's no transcript here. So I'll go back to that fancy website, and all I'm going to do is this. I'm going to do Q3 again. MetLife, earnings call. You notice it's already trying to guess for it, transcript. Now there's a number of Motley Fool has it. They're really good at their SEO because they always come to the top, but I like Seeking Alpha. So this is the one I use. I click on that, boom, I'm right here. Here's the transcript. Here's the document that actually walks through word for word, every person who spoke, what they said, etc. Now, again, you will not have that pre-call. So if you're getting ready to do the teach, give me a thumbs up. Are we seeing everything okay? You see? Okay. As you locate the call or transcript, if it's pre-call, you're going to actually register for the webcast. So you're going to look for a webcast. They'll actually give you a chance to register, just like you registered for this, and I'll actually give you a calendar invite. So you can click on it, go ahead and jump in and listen to it. But after the call, within 24 hours, you're going to be able to go to that website and be able to access all that information that I was describing. That will all be up ready to go, with the exception of maybe the Q document. Well, folks, that's step number one. Got to locate the call or transcript. So step number two is reviewing your notes. You might be saying, Brent, what do you mean reviewing your notes? I don't have any notes. Well, if you haven't gone through this program, you don't have our great tool, then what you could do is you could jump back over here and I could look at Q2 press release. And I could do a quick review. What's going on? What happened? The value of that is to kind of see over time the patterns that the company has as far as their seasonality around their revenue. Is their strategy really progressing? Are you seeing improvement in the numbers, etc.? So I highly recommend that you review that. If you haven't walked through it, just do a quick review of their most recent call. You can download the previous transcript, etc., and do a quick review. Now, once you get this tool and you start using it, that becomes the resource. Continue to come back. If you go through the tool, I just did, for example, next quarter when I go to look at MetLife, it's all there. I can quickly, here's what their strategy was. Let me see what happened in the numbers, etc. So review your notes from past calls, and the last part is to meet with your team. What do I mean by meet with your team? Well, it's this idea of you learn more by working together. You get great value by doing this with somebody else. Now, if you're in a management role, you have employees. Boy, it's a great thing. Sit down with your team and have a discussion. What did you learn? What stood out to you, etc. A great way to kind of capture that. If you don't have somebody from the office, just do it with a friend or something. It's a great way to kind of learn and build together. The question is, Mary asked the question around Seeking Alpha costs money. Do you have other transcript resources? Motley Fool's the other place. That fool.com is a great one, Mary. That being said, and maybe they've switched it because I actually eventually purchased a license. But it used to be you could get the most recent quarter in Seeking Alpha, but then we used to be able to get all the quarters. But then they kind of locked the free version down to just get one quarter's worth. Maybe some of my colleagues on my team here can look that up. Because I have a full version, I don't know that I'm clear exactly what they give you today or not. But you should, at a free version, be able to find that through Motley Fool, Seeking Alpha, etc. Great question, Mary. Okay, so let me jump into... So that's step one, the prepare phase. What do you want to do? You got to locate the call or transcript. You got to review your notes from past meetings and then meet with your team. So the next is the analysis, and that's the meat of the tool. That's where you're going to spend some time. Now, for those who have been through our program, some of this will be familiar. If you're not, it's going to give you a simple framework and a process. So let me start with the framework first. As we jump into the framework, here's the 5-driver business model. Now, many of you have been part of our program, so help me as we kind of do a quick review. I want to make sure for those that are new to be able to see this simple framework. This simple framework, I'm going to suggest to you today, these 5 drivers, cash, profit, assets, growth, and people, are the fundamental drivers every company focuses on. Whether you're multi-billion-dollar MetLife or your small mom and pop shop, these are the fundamental drivers. So let's do a quick review. We talk cash in business. Cash is blank. Fill in the blank. For all of you that participate in our courses, Cash is what? Cash is important. Cash is, there you go, Carolyn. Cash is king. A common phrase, cash is king. In fact, some will suggest it's a company's oxygen supply. If that's truly true, if a company runs out of cash, what's going to happen? If they run out of cash, what's going to happen? Yeah, cash is king. If they don't have any cash, what's going to happen? Carolyn, they're going to go out of business. Absolutely. They die. They run out of oxygen. They die in the business. You see companies during the pandemic, companies like Boeing. For those of you who were with us a few months ago, we talked about Boeing. They borrowed $42 billion to have cash available to withstand a huge impact to their business. The pandemic was a real challenge with them on top of their 737 MAX issues they had. Versus maybe like an Amazon, where you saw tremendous growth in Amazon's revenue generation and cash flow. So cash is king. Cash is vitally important in a business. The key metrics we look at there are going to be what we call cash and cash equivalents, sometimes referred to as just cash on hand. We kind of described in our courses, it's kind of like a savings account versus cash generation, or what we call cash flow. The difference between all the cash that comes into a business from your core operation minus all the cash that goes out to run the business. That net difference is called your cash flow from operations. That's one of the most important numbers in the financial statements. In fact, Warren Buffett suggests that it is the most important number he looks at when he looks to invest in other companies. Where would I find that cash flow from operations? It's going to be right here, part of my cash flow document. Now, again, don't worry. You don't have to have a CPA, or you don't have to have gone through an accounting class to understand the tools I'm going to give you will help you access this information. Now, when we talk profitability, there's two ways an individual can impact profitability. Can anybody remember what they are? Give me one or both of those ways. How can I impact? One is to increase something. The other is to decrease something. Anybody happen to remember? We want to grow profitability in a business. What levers do you have? Okay, Joe says efficiency, absolutely. Increase efficiency. Yeah, anything I can do to increase my revenue. By the way, it's also known as sales. So let's get this in the chat box. Revenue is the same thing as sales, which, by the way, is often referred to as top line. Let's don't get confused on terms. Or we can reduce our cost. If you look at a full company, that's reducing your expenses, right? We all hear about this one all the time, but it's also growing this. Now, how do I grow my revenue? I can grow it by getting better pricing. An increase in pricing will impact that. The other is writing with my mouse versus my pen. The other is to increase volume, sell more of what I've got. Excellent. You guys got it. So those are two levers. Now, different metrics you can look at, obviously, top line revenue or sales. The next kind of profitability line, typically, you take out your direct costs, you get to gross profit. You take out other operating expense, you get to operating profit, sometimes referred to as EBIT. Extra credit points in the chat box if you can tell me what EBIT stands for. Take out your interest and tax, you get to net profit. Sometimes you'll also hear EBITDA is a common one. Sometimes you'll hear income or profit before taxes. These are all different types of profitability. The other term you want to look for or listen for is margin. If you hear talk margin, that's typically a profit metric as well. Excellent. Extra credit points for Joe, as well as Bill. Interest and tax. Yeah, what do I win? We'll have to come. I'll talk to our team. We'll figure out what we win there. A gold star. We'll get you a gold star there. Joe beat you. There you go. So profit is absolutely important. Of course, the statement you want to look at, this is the one you hear a lot about. It's going to be that income statement. It could also be statement of operations, statement of profit. There's all sorts of terms, but most commonly referred to as an income statement. Okay, assets. Assets refers to anything you own or control which has value. You think about MetLife. What do you think they own or control which has value? This is a little tricky. It's a financial institution. If you look at what they call their equity ratio, meaning what portion of their assets do they have legal rights to? Basically, it's take your total equity, divide it by your total assets. They're about 7%. So they don't own a lot. But as you think about what do you think are some of the assets of a insurance company, a retirement company? What comes to mind? Any thoughts there? It's kind of an interesting one. One of the biggest things okay, so you have office buildings. Yeah, they're going to have some buildings, maybe some IP and IT systems. Excellent, Carolyn, you're thinking the right way. You know, a lot of what they have is they take the investment, the premium dollars, and they invest it. They have money going to venture private equity investments where they're investing in different to get a good return on those. So it's interesting to kind of see what you don't get a real clarity, but all the dollars they have is actually premium dollars or investment dollars that have come in. They then take those and they invest on all sorts of things. Now, many of them they don't own. There's just an investment play. So it's interesting to kind of see. It's a little different balance sheet than what you would see. In fact, the whole financial statements are a little different in a financial institution versus any other company you might see. Yeah, vaults of money. There we go. We're getting to the holidays there. Well, assets. As you think about assets, the balance sheet is where you look to see what's going on with your asset perspective. What do we want to do around assets? You want to have a strong financial asset base, what they call asset strength, but you also want to utilize your assets and deploy them. So there's this balance between the two. How much do I hold on to strengthen my financial position versus how much do I invest? Of course, MetLife, the majority of their dollars are out the door, trying to invest, trying to expand, get a return on those premium dollars. So a huge amount of investment dollars going out the door and very small amount of ownership in what they do. Kind of like a bank. You think about it, as you put your cash in the bank, who owns that cash? The bank doesn't own it. They take your cash, though, and they use it to invest in other projects. That's exactly what you see MetLife doing and others within this space. Of course, the foundation, I just want to make a connection on those first three drivers. The foundation, as you look at those cash, profit, and asset, the foundation of the three financial statement. Growth is what investors expect. And then people are both those external customers, those that buy or use MetLife's products or services, but also internally. How well do we execute across our different functional areas? Well, folks, that's the simple framework we're going to use. And I'm going to show you two tools that we take these five drivers and be able to assess both the strategic focus of the company as well as the financial performance. So let me start here with the first tool. It's called the Executive Alignment Tool or Executive Alignment Activity. How does it work? You'll notice I got the five drivers right here. Excuse me, my mouse got excited there. Here's the five drivers. So how do I use that to assess the strategic focus? Here's what I do. I listen to the call or I capture the transcript. As I'm reviewing that transcript or listening to the call, I'm going to start marking it up. Every time I see cash, I can put a little slash mark. Every time I see profit, I'm going to put a little slash mark. Assets, growth, and people. Over time, as you keep doing it, you're going to start to see patterns. In fact, as you look at, and now when I do it on my transcript, I don't know if you'll be able to see this. It's probably the worst idea, but I'm going to try it anyways. But you'll notice I just mark it up. I just write right on it. Here's profit, here's cash, here's asset. So you take that information, and then what you're going to do is you're going to answer a few simple questions. The first question is, which business driver seems to get the most attention and why? I love that part of the question. What's going on? How's the pandemic impacting MetLife? Obviously, it's a life insurance company. We're dealing with a pandemic. It is impacting their business. What are the two or three main points the executive's trying to make? What's the goals and objectives going forward, and what are the key questions or concerns raised by the investment community? At the end of that, you'll have a quick understanding. What are they talking about? Why are they talking about it? And then begin to take that information and eventually get to the apply phase where we say, so what are you going to do about it? Now, don't worry. If you haven't taken our class, right here, you'll notice we've got definitions on every one of these drivers. So here's the definition around cash. And then not only that, we have these examples. I call them trigger words. Basically, if I hear something about a dividend or distribution, I know that's going to be cash. If they're talking stock buyback, that's going to be definitely cash because it takes cash to do that. But I also will probably say, I'm going to think people because that's value back to my shareholders. But there's little kind of examples or trigger words you can be looking for. So you don't have to go through our class to be able to walk through this experience. At the end, you may also look at how the market responded, what did they say, et cetera. So this is just information. I take the call, kind of capture it in a way that can help me to be able to then apply it, do something with it. So here's what I want to do. I've got 3 quotes that I pulled from the call. We don't have time to go through the whole call, but I have gone through it, so I'll give you my results in a moment. But let's just go through this. In the chat box, here's what I want you to do. I want to walk through this quote from their CEO. I want you to put in the chat box, you got the 5 drivers there. Tell me which of the 5 drivers stands out. So here we go. We are a purpose-driven company at a time when stakeholders will accept nothing less. We have the right strategy to see us through even the most turbulent environments, and we have a strong culture of execution that gives our shareholders confidence. So put in the chat box, which driver seems to be standing out as you look at that? Yeah, for sure. A lot of people, I'm seeing stakeholders, I'm seeing shareholders. Now you can talk about kind of growth right strategy to see us through turbulent times, to be able to strong execution culture, ability to execute around our asset base. I mean, you can look at a few there, but definitely people's going to be there. Well, let's go to the next one. Adjusted earnings were 2.1 billion, up 31% year over year. Adjusted earnings per share were $2.39, up 38% year over year. So which driver do you see there? Now, if you're saying, Brent, what is it? Now, earnings, remember I said earnings, profit, and income are the same thing. So that might be a trigger word. And I'm seeing stuff like this that to me immediately give me trigger words. So which drivers are you seeing here? Okay, definitely growth. Yeah, up 31%, up 38%. Now, of course, then the earnings gets me to that profitability, right? This number right here is going to be net revenue minus their expenses to get this $2.1 billion. Now, they've done some adjustments. Now, when you hear adjustments, here's what they're doing. They take the standard approach, which we call the generally accepted accounting principles or GAAP, and they're adjusting it based upon the kind of one-off. They call them non-reoccurring, or there's another term. Notable items. This right here, notable items. So kind of unique things that happen 1 year over the next. They'll net those out to say, am I really getting better or not? If you get a big tax benefit in 1 year and you're not going to get it the next year, you're going to see your numbers fluctuate a little bit. So they're going to adjust out that big tax benefit, and they're going to say, okay, let's do a kind of an apples to apples comparison with taking out those notable items or those unique items that we had. Okay, well, let's jump to that last one there. So we're getting pretty good at this. Let's jump in. Let's see what we've got. Here we go. Excluding total notable items in both periods, adjusted earnings were up 24% and adjusted earnings per share was up 31%. Very similar to what we've got here. So our profitability metrics and growth are absolutely going to be key to this. Okay, so that's from their CEO, Michel Khalaf. Let's look at their CFO, John McCallum. Now, I'm not going to read through this. You just read through it. And in the chat box, put what stands out. As you're doing that, Carolyn asked a great question. Can one word or term represent with 2 tick marks on your sheet? Absolutely. As I said earlier, you talk about dividends payments, right? If we're paying out dividends, that's going to be cash because the business has to take, that's literally they're paying cash to investors. So I got to have cash to do it, but obviously it rewards shareholders, so it's impacting people. So on that one, if I was doing something about dividends, I'd have a slash on people and I'd have a slash on cash. So absolutely. So Ron's kind of saying, as he looks at this, great question, Carolyn. Let me know if that answers that. You can see, let's see, Ron's saying profit and growth. Anybody else want to weigh in? Of course, I'm hearing earnings. I see trigger words. So similar to what we were saying before. Strong returns, private equity. See, they take some of their cash and they do private equity investments, which is kind of unique. So a lot of profitability, yes. Assets, you can see some of that as they're taking cash and investing in these private equity opportunities or portfolio. Definitely is an asset base. So yeah, profit and growth. You can kind of tell, even just in a couple of quotes, where they're kind of focused on. Well, not only do you have the prepared remarks, but analysts also ask questions. I wasn't able to get a picture of Tom Gallagher. Could not find a picture of this individual. But he's from Evercore ISI. It's an investment group. And here's what was communicated there. What stands out in those numbers? Bill's asking a question, or maybe he's making a comment. Cash and capital are the same thing in business. Absolutely. Cash is also an asset. So 2 ticks. There you go. There you go. You could bring that as well. Great connects, guys. Good stuff. So long-term care claims, you said, return to more normal levels this quarter. That was an interesting finding for me. You know, obviously because of the pandemic, that has gone to the forefront of all insurance. You know, so healthcare has been dealing with that quite a bit. But a lot of stuff that people would do, dental care and other types of insurance have been kind of delayed. So we're finally getting back to normal levels of kind of claims. So that was kind of a message that they had. So go ahead and read through and tell me which of the 5 drivers stands out on this communication. From the analysts, what are they focused on if you look at those numbers? Anything that stands out? Yeah, long-term claim. cares, is that kind of assets, definitely a service, long-term care is part of their services for sure. Profitability, some of the cost side of it. Part of it is it's kind of inferred long-term care claims. If I was disabled, or if I have a long-term care disablement part of my insurance policy, obviously it's people as well, right? So volume obviously is going to impact kind of that profitability as well. What is a claim? Claim is basically going to be an expense for them, right? They got premiums coming in. You got a claim. You got to pay that claim. So it's going to impact their profitability. But of course, and I love the message that their CEO shares around this. This is not the time to be kind of debating around, paying out claims when we're dealing with a pandemic. So very good message around that, around getting money back and paying these claims out for those that have both life insurance as well as other claims. Well, folks, you kind of see how it works. That's how it works. Now, a couple things I'd share is kind of things to think about. Number one, as Carolyn talks about, it's not just one for one. The second thing I'd say is there's not exact science, meaning if you were to do this letter or this earnings call and do this activity, you and I may not get the exact same number of cash, the exact same number of profit, asset growth, or people. That being said, we'll do about 1,000 sessions a year, multiple industries, healthcare, oil and gas, consumer products, technology, telecommunications. I mean, you name it, we do it, right? Federal contractors, etc. We find that with this tool, that the top 2 or 3 rise to the top with everybody in the group, doing about 1,000 times a year. So it gives you some framework, some things to think about, and then be able to answer the questions. Well, folks, we don't have enough time to go through the whole thing, but I did. I went through this for you. So here it is. Now, a couple things that you'll notice the way I do it. You don't have to do it this way, but I like to kind of clarify what was prepared marks versus analyst questions. What I'm looking for is consistency in communication. You'll notice there was only probably 6 to 8 questions. There wasn't very many analyst questions, and actually the timing wasn't such that we didn't have enough time for them. It was more they just didn't have as many questions. So you look total question amounts. I mean, compared to the prepared remarks, it was much different. But as you look at these numbers, here's kind of what you get. So the key ones that stood out right here, you're going to get profitability. And the next one would be growth. Now you saw that in our communication. You listened to their earnings call from their executive, that quote, it was about profit and growth, as well as from their CFO. So you see a lot talked about. So the next part, now we've done the numbers, we've gone through the thing, what do we do next? Let's answer some questions. So here's the questions, then I kind of filled them out for you. Let me kind of describe what I saw, and maybe it'll help you, give you a little more insights on the company. So first of all, profit was definitely their number one. Why? Well, I might jump down to some of these things. These are some quick snapshots on why. Then here's some kind of comments that were made in the course that I like to highlight. So first, number one, their business model has a significant focus on return. They're taking premium dollars. They're going to take that money, they're going to invest it and make returns off of that. That's where they make their money. And so return focus is a big part of the financial services industry, whether it's a MetLife type financial services or even a bank. They're very focused around what sort of return. You take that money, you then invest it, what sort of return are you generating? So obviously profitability is going to be important. Large portion of their assets are invested taking those dollars and getting a return on them. Prior year, they were down 14% on the quarter, and margin was down to only 4%, meaning every $100 they brought their company, they generate $4 versus about a 10% is what their normal margin was. Now that was in Q3, but for the full year even, they were down 6% year over year in 2020 versus 2021. So they did see some impact. So you're dealing with a little bit of down in 2020 and seeing are we getting recovery in 2021. Their business model focuses on, and of course the majority of their assets are invested dollars in venture capital opportunities, all sorts of investments that they're doing, portfolio investment, etc. So what was kind of stated, some of the comments, adjusted earnings where they were, they're up, very focused on that. That's the message we saw, or what they call variable investment income. This is actually where they take dollars. This is where you see like their venture capital investments, etc. was outstanding. underlying PFOs, that's premiums, fees, and others. You take those three plus this variable investment income, and that gets kind of their revenue dollars. We're strong and expense discipline. So they're both growing their top line revenue side, but they're also managing their expenses, which is allowing them to grow their revenue and manage their expenses, the key focus of what they talked about. So part of it's who their company is, part of it's they're coming out of a pandemic and showing their investors that they're improving, et cetera, is kind of why I saw them focusing on that. Of course, growth was a big part of that. I'm not going to talk about, but there's all sorts of stuff we could look at growth. Growth was about 64. Profit was at the 51 number. Okay, so I've got which one they looked at. Here's, again, the slide deck. I just want to have one slide at least in here from their deck. What I love about it, it gives you quick information, kind of what's happening. Here's their adjustments. I can actually see what they did to adjust those numbers to get to kind of a year-over-year comparison. Dollar amounts is what they looked at. So what were the 2 or 3 main points the executives were trying to make? I got 4. So number 1, this idea of focus what matters most. That was throughout the call. Purpose-driven company, right strategy to see us through the events of most turbulent environment, strong culture of execution gives our shareholders confidence. So that was a key message. In summary, key message for the quarter and the first 9 months of the year. MetLife delivered another very strong quarter driven by exceptional private equity returns, solid top-line growth, and ongoing expense discipline. Those 3 things. These investments that they're doing, variable investment in income, along with their premiums, fees, and other revenues, are increasing. On top of that, they're managing their expenses. So key message they wanted to get to the market. In addition, our capital liquidity investment portfolio remains strong and positions us for further success. Finally, we are confident that our actions we are taking to be a simpler, more focused company will continue to create long-term sustainable value for our customers and our shareholders. Overarching, if you were to sum up that, what are they saying? A real confidence in their future, a real return-focused organization, and they're really at the right place at the right time with the right solutions for their customers. So again, and you'll see this, by the way, even when companies are struggling, you're going to see these messages around, hey, we got confidence in the future, et cetera, because that's what investors want to hear. And so they'll speak to the challenges they're focused on and how they're going to overcome them. Of course, MetLife's having a great year this year. So what are some of those goals and trends? One of this, they have a key metric. It's called direct expense ratio. It's basically the direct cost of providing their products or service. 12.3% is their goal. Now, interesting enough, when I get to analyst questions, there's a lot of questions around this because they're actually quite a bit below this right now, meaning their direct expense is lower than 12%. And so they're kind of saying, why wouldn't it be even lower? And they talk about some year-end expenses they've got to make that's going to get to this 12.3%. Of course, a lot of goals and objectives around their New Horizons strategy. Relentless focus on deploying capital and resource to the highest value opportunities. Of course, they've always been a part of it. A couple of years ago, they came out with this kind of New Horizons strategy, or the last year. And they're really focused on making sure they're getting great returns, getting a much better return than what they call their internal rate of return. If you've taken our course, you may remember that term. But they really want to get a nice growth opportunity than their hurdle rate. Although the pandemic continues to create uncertainty, I'm confident in our ability to continue to execute and create long-term shareholder value for our shareholders. 3 billion share repurchase just came out in August. They've already repurchased 500 million shares. So that's a big positive for their investors. And then optimizing their portfolio business, shifting our product mix to be more capital efficient and fully embrace our efficiency mindset. So a lot of efficiency, be leaner, be more effective in what we do to provide great customer experiences. Well, let's wrap up this section with key questions or concerns. As I said, more information on specific assets, the non-medical health claims, dental claims, non-traditional covers like pet and legal. There were some questions around that. This idea, this 12.3, you're below it. This is where, if I was going to say anywhere where I felt like analysts were maybe pushing back a little bit, was here. Because that direct expense ratio is actually below 12 right now, they're saying, well, you only have one more quarter. Why would we expect that to increase? Of course, their response was, here's some new technology investments. Here's other investments that we're doing to kind of provide more services, et cetera. The significant increase in quarterly dividends demonstrate confidence in the future, an increase of 21%. Great question. Yeah, absolutely. When they start increasing their dividend, think of it this way. If you as an investor receive a dividend, and let's say it's 60 cents a quarter, and they increase that to 65%, what does that tell you as an investor? Hey, this is good stuff. Now, what's the chance, once you've increased a dividend, what's the chance that a company's going to reduce that dividend? What do you think will happen? If you increase your quarterly dividends and you choose to reduce it, what's going to happen to your stock price? Any guesses? Basically, I'm asking, is the investor like that? No, Colton, there you go. Absolutely. So to answer that question, Andre, absolutely. If they're increasing their quarterly dividend, now they may do a one-off or a one-time uh, um, dividend. You see companies do that, and investors, okay, it's a one-off. We had a good year, we'll do a one-off. But if you're increasing your quarterly dividend or your annual dividend, the expectation is you're going to maintain that into the future. And if you don't, that's seen as a negative. So last bullet they talked about that I thought was an interesting theme was they wanted specific information around different geographies where MetLife plays, particularly around, there was questions around EMEA, Latin America, Chile, specifically Chile and the US. In Chile, for example, they have a pension program that they facilitate. And with the federal government elections, that may impact what happens with that pension. So definitely something that was brought up in the conversation. Well, as you look at the quarter, at this point, we've completed that executive alignment tool, a great resource to quickly assess. Now, what do we know? At this point, I understand kind of what they're, which of the 5 drivers they're focused on. A big emphasis around profitability. Why? Because in prior quarters, they were down a little bit. Their whole business model is driven by returns and growth in their profitability, et cetera. We looked at some of their key messages. We look at what the analysts are asking, et cetera. From there, I take that information and I want to now say, what can I see within the numbers? So the next tool I want to look at is called the Navigating the Financial tool. This is in the packet. What I love about this tool, it takes the 5 drivers that we talk about in the program, as well as all your key metrics and measures, and the financial statements, and basically puts them in one location. Really easy access. So you don't have to memorize, or you may not even have had to go to our program to be able to walk through this tool. So if we're going to complete this, here's how I do it. I look for the first key metric I want to find, and that's the cash and cash equivalent. Even though I may or may not have gone through the program, right here it tells me what statement to go to find. That is the balance sheet. So I jump to the balance sheet right here. I've got the balance. I've got the asset section. This is as of the end of Q3, September 30th, 2021. Now, what's interesting, and you'll see this in these financial services, a little different look at a balance sheet. You'll notice you got all these investment dollars right up here. This is all their dollars they're investing in different opportunities, fixed maturities, equity securities, et cetera, mortgage loans that they're invested in. All those investments they've made go before your cash and cash equivalent, and that's what you see right here. So to see how much cash did they have on hand, how much did MetLife have at the end of Q3 of 2021, I'm going to look right here. I look over, it's $18,956,000,000. Boom, I plug that in. It's there. Now then, if I wanted to, I quickly look at, well, how were they a year ago? But in the end, you're going to capture this information as a way to see, is what I'm hearing them talking about, can I see it within the numbers? So the next metric that we'd look at is going to be that of the cash from operations, also referred to as our cash flow. What statement do I want to look at? Right there, I'm going to go to that cash flow statement. You don't have it in your packets, but I have it. So here we go. Got our cash flow statement. Now, interesting enough, it starts with just this one line. Here's the cash flow from operations, $7,256,000,000. You remember from our review earlier, what do we want that to do year over year, quarter over quarter, et cetera? We want that to increase every single quarter. What is it doing? From fiscal year 2020, the first 9 months, to 2021, first 9 months, you see nice improvement in their cash generation. So I plug that in. That's the cash driver. Let's do a couple more and then I'll show you the numbers. The next one I jump into is going to be our profitability. Of course, what statement would we look at? That's going to be the P&L or income statement. Right here, it tells us for all 3 of these calculations, I'm going to look at the income statement. So I jump in right here, the statement of income. And what do I notice? Here's the revenue numbers, but they break the revenue into multiple line items. You'll see you got premiums. This is universal life investment type product policy fees. They have their net investment income, et cetera. All these come together into a total revenue number. That's the number I'm looking for. Because I'm looking at the quarterly numbers, here's what I want to capture right here, $16,905,000,000. That's the number I'm looking at. Now, of course, what do you want that to do year over year? You want that to improve, and you see that improvement in 2021. I plug that into my numbers. I've got it right here, and I now have my total revenue for the Q3 of 2021. Well, let's go ahead and do the next one. I got to get that net income, jump back to that same statement, also known as the bottom line. I find it right here. Net income attributable to MetLife common shares.
$1,521,000,000. You'll see a huge improvement. If you had more time, you'd want to see, why did that jump so much? I only get a $900 million increase here, but down here I grew by close to $1 billion. What changed in their numbers? That would be a great exercise if you want to look at the details there. I plug that in. Now at this point, I have my numbers to do my net profit margin calculation. So all I'm going to do is I'm going to plug this one in the top, my numerator, and put this one down as the denominator, and I'll get the number. So I plug that in, $1,521,000,000 divided by $16,905,000,000 gives me a net profit margin, oops, got carried away, of 9%. That's it. For every $100 MetLife brought in revenue or sales, they generated $9 of profitability. That's right about the S&P 500 average, usually somewhere about 9 to 10%. That's about where they're located. Well, folks, that's the tool. Now, I don't have time to go through the whole thing and calculate every single one with you. So here's what I'm going to do. I'm just going to give you the numbers. So let me go ahead and plug those in and give you the rest of the numbers for the document. You may want to look at this or take a picture of it. Welcome to do that. So here's our equity ratio, 9.1% there. We look at our growth numbers down at the bottom, etc. Now, what I also did is I did it for the full year ago, same time period, Q3 of 2020. What do I see? You'll see their cash is down just a little bit, but their cash generation is up. They love to see that. Revenue's up, net income's all up, and the margin's much better. It had a low margin in last year's quarter. If I want to see more detail, I go back to Q3 of last year, as I showed you earlier. All that information is there. You can quickly assess and see, why did that go down and why did this one go up? In the end, you can look at the growth numbers as well. You'll notice last year, 2020, we see a decrease in revenue and net income numbers as they went through the pandemic. Now, you don't always have to do it on a quarterly basis. You can look at it on a year-to-date basis. So here's the MetLife's numbers year-to-date, 2021 versus year-to-date last year. Again, you'll see revenues up. You see our net profit relatively flat, actually. In fact, the margin for the full year of last year, even though Q3 of last year was low, was pretty strong. If you consider Q1, they had a strong quarter. You look at the rest of the numbers, of course, growth down year over year as you look at that versus growth going back up. As you hear them talk about getting back to pre-pandemic levels, that's what they're referring to. Now, folks, as you use this tool, you can do it again, quarter over quarter. You can do it year to date over year to date. But you can also do it if you want to look at competition. How does MetLife stack up to Prudential? You'll see very similar numbers, similar cash on hand, similar cash generation. More revenue here, yet they generated more cash at MetLife. Interesting. And margins are lower here at MetLife versus what you're getting here. Now, of course, if you want to do a full analysis, you look at why. Why is that going up or down, etc. You can also do it on any company. For those of you who joined us last quarter or last month, we looked at Chevron. So here's an oil and gas company in comparison to a insurance company. Obviously, different revenue numbers, different profitability margin numbers, and different growth numbers based upon industry. Well, folks, that's called the Navigating the Financial tool. Now, at this point, you have a clear direction of their strategy. You got clarity around what they're working towards, what their goals and objectives moving for. Now you're looking at the numbers. You can see where they're strong and where they're not so strong. At this point, what do you do with it? How do you make sense of this? That's the last stage. The last stage is all about application. And this is key here at Acumen Learning. This is more important than most of what we do. The ability for you to take this information and do something with it, that's the real value we add. If you say, Brent, this is interesting. Hey, this was engaging. It was fun. That's great. And I appreciate the accolades. But in the end, it's all about what are you going to do with it? Here at Acumen Learning, these are the types of things. We have a chance to work with many great companies, and our focus is very driven by application. How am I going to use this information to do something different? And our Building Business Acumen program, our flagship program we've done with 30 of the Fortune 50, many of the Fortune 500, here's the types of results that you can get. As you listen to these calls and begin to apply this information, here's the results you can get. Improve your performance of business and performance of your business and function. Increase your collaboration capabilities. Improve your upward communication. Improve employee engagement. Increase business focus and improve teamwork. This was a study that was done unbeknownst to us as they did a research to say what sort of benefit was our client getting. They found over a 300% return, and these are the outcomes that we get. Well, these results we see in every client we work with. So we'd love to have a chance to work with you. If this is something you're interested in, please reach out to us. But that's what this application is all about. How do I take what I learned in my quarterly report and use it? So the last part is all about application. To know and not to do is not to know, meaning if you know it, you don't do something with it, you've wasted your time. Well, let me share kind of that last part of the tool. And as we jump into that, it's our application. The first thing we're going to do is you're going to look at what were some of the new insights you gained as a result of your analysis. For me, there was a number of ones. This one I'm going to read. That one was impactful for me. The other three I'll let you kind of look at. This bottom one, new business investment, that was huge. They've had real success. They're getting 17% internal rate of return on those new business investments that they're doing with a 6-year payback period, which is really good. So much more. One of the key insights for me was how big they are and all the things they do. The one thing that was interesting, why I want to read this first one, is it's very impactful for me reading an insurance company during a pandemic. And here's a comment that was made. Paying COVID claims is precisely how life insurance companies make a positive difference for the world. Sometimes insurance companies, we kind of give them a negative perspective because we always deal with insurance companies at a time where I'm in a car wreck. So I got to go get my auto policy out, etc. But what it's interesting, it really speaks to what they're trying to do. And they say the human toll of the pandemic on families is catastrophic. But where life insurance is present, the financial burden is eased. This is our purpose, to help prepare financial damage after life's most destabilizing moments. And that's a huge thing. They spent $2.5 billion just in the US on COVID-related claims. So love that message during a tough time, and the fact that they're there to back up people, whether it be life, heaven forbid that happens to us, or our property casualty, even our pets. It's great to know that you got a good partner there. And so really, those were some insights that stood out to me. Maybe a little bit more human perspective of an insurance company than maybe I came into earlier. Well, so what am I going to do about it? That's the next step. So you got all this information. Here's some key insights. What are you going to do about it? Well, in my role, I'm a trainer. So it's all about, I'm going to take this information. I want to compare it against their peers. I want to determine how they fit within the market. How does that impact what they try and do? With the last goal being, I would love to work with MetLife. We've done some work with them in the past to reignite that. That would be a great outcome. Be able to help them really drive the success of what they're trying to do. Of course, I'm also going to share this information with my colleagues, my peers, new customers, etc. What's going on in this field, and how does it impact what I'm trying to do within my business with some of our clients? So those are the things that I would do. Now, of course, if it was your company, there may be different outcomes. I noticed they have a real emphasis on managing their expenses. So what can I do to impact that? Maybe it's all about new customer ads. So what can I do to help drive that? How can I make the experience even more successful with the customers so they want to stick with MetLife, etc. In the end, you take that information, describe what is it you're going to do. From there, the last step, and probably one of the most important steps in your application phase, is this: have a conversation. Schedule a review. If you analyze your own company, if you're an employee of MetLife, you're going to sit down, you're going to have a conversation with your manager. You're going to talk about the 3 things you think you should do based upon what you heard, and get confirmation that, yes, that's where we want to support our time and efforts. If you analyze the customer or a partner, what you're going to do then is you're going to meet with your sales manager, maybe your account team, to define kind of what your customers or partners' business goals. What are they trying to accomplish? How can we kind of make a business case as to why a partnership with our company would be important? If you analyze the competitor or benchmark company, meet with your manager or team to compare your business to that company, to analyze, identify the actions you and your team can take to be more competitive and innovative. Folks, that's the last part of the tool. Now, at this time, imagine you did this for the next 2 to 3 quarters. You can see where my guarantee comes in. If you do this 2 to 3 quarters in a row, you'll know what's going on in your company more than most of the employees within the business. Not only that, you'll be able to tie your day-to-day activity to what the organization is trying to do. If you use this from a sales perspective, you're going to have conversation with your customers where you truly understand what they're working for and be able to make a business case how your products or services can drive towards that. In the end, that's what this tool is all about, and that's our goal, is to help people to be able to accomplish that. Well, that's the process. Prepare, analyze, and then apply. You'll remember that second step in my prepare phase was all about being able to review your notes from past calls. This tool that you just created, if you do this on a quarterly basis, it's going to be what you'll review. You'll pull that out. You keep it on you can either, it's a read-writable PDF. You can keep it on your desktop or your computer. You can print it off somewhere. But you pull that out and you say, okay, what did we talk about last quarter? Okay, I understand. This is what they said they're going to do. Let me see what happened as I listen to the next call. So that's what that tool is. Well, folks, my challenge as we wrap up today, my challenge is this: who will you analyze? That is the goal. To know and not to do is not to know. You got to do something. So who are you going to analyze? Is it somebody you're going to work for? sell to, compete against, partner with, invest in, or just I'm interested in. Or maybe you'll join us in a month from now as we look at Verizon Communication, one of the largest telecommunication companies in the world. What's going on in that space? What's happening there? And practice using the tool by looking at Verizon. Love to have you join. So in order to do that, let me give you a website, acumenlearning.com/webinar. That's where you're going to access the tool that I've been talking about. Download that, use that. Come back, join us in the Verizon. Use this tool listening to Verizon's communication. That call will happen on December 15th, same time, just in about a month or so. In addition, at this website, you can also give us feedback on potential companies you'd like us to look at. If you're new to this information, you haven't had much exposure, we're giving you $100 off on an online self-paced learning tool focused on the 5 drivers as well as how to look at financials. It's a great resource. 13 modules will walk you through how to understand business and financial acumen within your role in your company. If you're a graduate and you want a refresher, that's also a nice resource, and you'll get that same discount. So anybody who wants that can use that. The last thing I'd say is if you've got a group of people, you say, Brett, that's great for me, but I want my team to understand it. Or we have a real initiative around growing our business, reducing our costs, growing profitability, et cetera. Please go to that website and reach out to us. We'll walk you through different programs that we have, self-paced, virtual, face-to-face, and how to approach this topic in your teams. With that being said, boy, folks, it's truly been my pleasure to spend some time with you today. Hopefully this has been helpful. Please come back, invite your friends. This is an opportunity to continue to build your capabilities on how to listen to an earnings call and use that in your day-to-day activity. With that being said, it is my pleasure as we end this call. Thank you very much for your time, and I'll see you in about a month. Thank you, and have a great holiday season.